Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week we're discussing the tax and filing requirements of changing an LLC's tax classification. Spiedel's California Tax Letter is a monthly newsletter that will ensure both you and your clients are up to date with California tax law changes. You can get subscription details and download a sample issue at caltax.com under Publications. For California purposes, nothing needs to be filed with the Secretary of State when an LLC decides to change its tax classification for tax purposes to or from a disregarded entity, partnership, or corporation. Entity classification is a tax function. The legal entity remains unchanged. The LLC can change its tax classification by filing an election to check the box to the new classification it wants, and it has to use the same classification for both federal and California purposes. But there may be consequences to making this change, especially for California filers. An LLC taxed as a corporation that later elects partnership status is deemed to liquidate and distribute all of its assets and liabilities to its shareholders, who are then deemed to contribute all the distributed assets and liabilities to the partnership. The corporation and/or the shareholders may have taxable gain or loss on the transaction, just as with any corporate liquidation. Also, the entity is required to file 2 timely short-year federal tax returns, as well as other information returns. Use Federal Form 8832, Entity Classification Election, to elect out of the default classification or to change a prior election. File Form 8832 for either an eligible entity electing to be classified as an association taxable as a corporation. If the entity wants to elect S corporation status, it can file Form 2553, or a domestic entity electing to change its classification, even if that classification is a default classification. For income and franchise tax purposes, California conforms to federal check-the-box regulations, and the taxpayer can't make a separate California election. The taxpayer doesn't have to file any additional forms with the FTB because California automatically conforms to the federal election. When the taxpayer files its final Form 1120S or 100S, they should mark it as final even if they're going to be continuing to file partnership returns with the same EIN. However, California does have additional tax filing requirements because of the separate LLC taxes. Although the underlying LLC remains intact, the LLC has to file separate short period returns for the pre- and post-reclassification parts of the taxable year. It has to pay the $800 annual tax and annual LLC fee with Form 568. And it's subject to the $800 minimum franchise tax for the period it's filing as a corporation, or a second annual tax if the entity is taxed as a partnership or a single-member LLC, regardless of whether the single-member LLC is owned by an individual or an entity. When changing from a single-member LLC to a multi-member LLC, the entity continues. However, unless the new member is added at the end of the LLC's taxable year, 2 short-year returns will be required, one for the single-member LLC and one for the LLC classified as a partnership. This means 2 payments of $800 each are required. When changing tax treatment, taxpayers need to be aware of the due date for the first short-year return. There is no prior year corporate exception for the first year the former LLC partnership is taxed as a corporation, or vice versa. For LLCs taxed as partnerships or S corporations and single-member LLCs owned by a partnership or S corporation, the return due date is 2.5 months after the close of the taxable year, or March 15th for calendar year LLCs. For LLCs owned by an individual or C corporation, as well as single-member LLCs owned by an individual or C corporation, the filing deadline is 3.5 months after the close of the taxable year, or April 15th for calendar year LLCs. The extended due date is 8.5 months, or September 15th for calendar year taxpayers for LLCs taxed as an S corporation and single-member LLCs owned by an S corporation, 9.5 months, or October 15th for calendar year taxpayers for LLCs taxed as a partnership, single-member LLCs owned by an individual, partnership, or C corporation, and 10.5 months, or November 17th for calendar year taxpayers for LLCs taxed as corporations. Spidell's Federal and California Tax Update is the best 8-hour update to prepare for tax season. See which topics we'll be covering this year and get registered for a live seminar or webinar session at caltax.com. That's all for this week. Join us next time for another episode of Spidell's California Minute.